Hey guys, Freaky Finance here. Today we're going to jump into Block. So slightly different than Amazon. We've done a point of sale provider before. There's a couple unique things about Block that we'll get into. The only POS we've done was StoneCo, but we're kind of more familiar with the point of sale systems and stuff like that. But we'll jump into the numbers. But before I do, I should show that I do own this one. So own it. XYZ is the ticker. Block, I'm going to keep calling it Square during the video just because of me. But I do own this one, so I disclose that. I own it in a couple accounts. This is a recent position. So they had a really bad Q1. They got down materially. There's a couple reasons why I'm excited about it, because partially because of that, and partially because of what the CEO and the CFO said lately after the call. And they also did the guide before the China deal was announced. So it's likely that they underguided for the rest of the year at a time when the business is actually finally good. Like, I looked at Square, it's been public for a while, and it's always been a crap company in my opinion. And now, especially after 2024, and we'll go through the 5-year financials just like we did with Amazon, but now it's clearly not a bad company. It's not dumb cheap like other POSs, like a Brazilian POS machine provider or just a POS provider. It's not dumb cheap like that, because there's a decent amount of growth in Cash App, so it would imply a higher multiple. And then they also have a Bitcoin rider, and we'll go into all that in a bit. But it's an interesting business model. Before we go in, you're going to see two main segments, and then Afterpay shows up pretty much in 2022. You're going to start seeing the financials. So you can kind of see the business kind of split between the two, with Square and Cash App, the main drivers, and then they have Afterpay, which shows up more in the later years. And we're going to talk into that as well. Here I might as well show this at the same time. You can see the revenue and gross margin severely impacted during the COVID shutdown, but you can see it's been building back since then. And they did cost control in 24 as well, so you see margin expansion with cost control, and you'll see that in the numbers as well. All right, so let's jump into it. So we just talked about the three main products that Square offers. So that Block offers: Square, Cash App, and Afterpay. So Square is the merchant service, the POS software, the terminals, the payments, payroll, capital. So this is pretty much what all the, like we own Shopify. It's the same idea that a lot of these POS providers are doing, as they're trying to be a one shop for everything. They're trying to offer capital, they're trying to help people with their AR and their cash flow cycles, and it's pretty much a recurring theme at this point. It's a way basically for the merchants to try to make more money off the small business or large business, whatever they are. Cash App is more of a P2P, but it's direct deposit, Bitcoin investing, so it's kind of like Canada, maybe more like Wealthsimple, maybe more like Robinhood in a way, but it's also trying to be a bank, so it kind of has some interesting aspects in it. And then they have the buy now pay later platform, which is at some point will probably be a dangerous thing, and it probably leads to better entries during a credit correction, during a recession, because all these credit providers are going to have to actually increase their provisions during a recession. So that's exciting in the long run for an option that's similar to like a bank, how I treat a bank. It's just we don't know how tested these systems are yet, especially all the ones that rely on AI for underwriting the credit. Now Afterpay and most of these buy now pay laters are very short duration, so it's easier to actually manage it because you don't have someone taking a large amount over an extended period of time. And one of the cool things about POS providers is that they see all the transactions, so they are more likely to have good information to know when to lend to you and when not to lend to you. So far, we've seen actually a decent amount of credit quality in the buy now pay later relative to what you might think, which I thought was interesting, especially as someone skeptical going into it. So Square, you can see the POS readers. Square's done a really good job branding themselves, especially for the very small businesses. They've done a really good job. They have a new reader that just came out. It's part of the reason why I finally own the stock, and why we started to position, aside from the price and the recent performance. But the thing about Square is basically like every other POS, they get a pound of fish. So their example here is a $50 transaction. Your business keeps $48.75. Square gets $125. Of that $125, Square only pockets about 34%. The rest goes to the Visa, the other card, whatever they are, card issuer banks or card networks. So that's kind of how they split it out, just for interesting purposes. So you can kind of see how the business model works in terms of the POS side. Basically, everyone gets a pound of flesh off the transaction. Yeah, here's just products, and you can kind of see what they're trying to do, like business loans, instant transfer, Square Card, right? And then you have the actual POS hardware. In terms of Square, I thought this was interesting too. This was on page 6 of their 10K for 24. And you can see that a lot of it is food and drink and retail, so about 50% of the business, which is interesting, especially because food and drink hasn't been that great for this year. But it is kind of, people need to spend money on food and drink, so it's kind of, in a way, it's a defensive way, whereas retail is more, obviously more discretionary, or it can be more discretionary. So I thought that was interesting. Cash App is growing pretty strongly. Here's a better chart just to show it. Is just, you can see that inflows is one of the reasons why Square or Block has grown like it has. Like, this is the Square business, like the POS business, is good because it's kind of stable, generally reoccurring. It's like POS providers are very, in my mind, they're kind of like cash cows in a way. Ultimately, they're a commodity, so and they pay a lot to Visa and MasterCard. And what's happening in the industry is that they're all kind of buying each other, moving things around. Basically, a lot of consolidation, and it's a scale game. That's really what it is. So it's kind of like a nice, steady business in my mind is Square. Now, it'll go up and down with the number of transactions. The number of transactions does decrease during a recession, but it's not as sensitive as other businesses are. And then here is just the growth. So that's what I'm trying to say, is one's kind of steady, one's kind of growing. And it's growing pretty quick. So Cash App has a lot going on in it. Paycheck advancements. And you can kind of see what they're trying to do. Deposit, bank on your terms. They're trying to be a bank online. The banks will eventually be replaced, or they'll have to compete online with companies that are software are far superior, because they had to do this innately, or they have some innate mobile leadership and better tech, right? In terms of the latest quarter, it was actually a slowdown in growth, and they guided to a slowdown in growth for the rest of the year, which leads to an opportunity as long as it is short term. This price actually kind of echoes other fintechs, so PayPal would be a good example of one that we've done. A very similar chart. So bubble in 21, when all those shifting was on goods. They also decided to buy Afterpay in here, which is a problem because they probably overpaid for it. The market would be insane. And then you can see during panics, like during the Q1 call, got super cheap. So we're able to pick some stuff up finally, right? And now the business is still back to where it was almost a decade ago, right? So 6 years ago, 7 years ago, which is nice. And you can kind of see that it usually rejects around the 50. So kind of has a little bit of technical long-term history. More importantly, from our point of view, is that the business is finally putting up numbers, like good numbers, relative to this whole history where it really wasn't, in my view. It's putting up growth numbers, but it wasn't putting up like numbers that I could see and be like, oh wow, there's scale here. And now I can start to see the scale. Block, before we jump into numbers, is also owned by a lot of hedge funds. Jack Dorsey still owns about 8% of the business. So a decent chunk of capital, but you can see a lot of hedge funds actually own it in a high ranking. So I'm kind of excited to see, because we're just starting to see the 13F filings for Q1, and you can see that a lot of the bigger holders were adding during the pullback, which is nice to see as well. Anyway, in terms of the 5-year history, you're going to notice 2022 was Afterpay. That's kind of what my little Coles notes there. And 2024 is cost cutting. They actually have a decent amount of detail on the 10K. So they have 4 different subsections of revenue, 4 different subsections for COGS, cost of goods sold. But you can see the revenue overall has gone from 9 billion to 24 billion. The thing about Square, though, or Block, is the Bitcoin revenue oscillates a lot, and it's not necessarily indicative of the overall company. So you shouldn't look just at the revenue growth for this company, because it's going to be too impacted by Bitcoin. So it's going to add to the volatility, and it's not going to give you the trend that you want of the underlying business, because they don't control what Bitcoin sells at. So what you need to do, basically, there's 2 lines. There's hardware revenue here, but it is relatively immaterial, and they operate at a loss. So basically, the business model is get the POS providers in the hands of the merchants and then make money on the sales that the merchants make. And that's a similar business that we've seen from other POS providers. It's basically get the systems out, sell the systems, and make money in the long run off the transactions. So transaction-based revenue is growing up pretty steadily, right? 32 billion, 66 billion, which is nice. And the latest was up 5%, which is basically in line with what's going through the platform, GPV. Basically, the more transactions from Square, the more revenue. And it's a scale game, so the more revenue, you should see scale in the bottom line. Subscription based, so that's your Cash App, 21% growth year over year. You can see it really grow 1.5 billion to 7.1 billion. There is, to be fair, just Square's growth and Square lending's also being put in here. But a lot of the lending stuff, instant deposits, buy now, pay later is in this line. And you can see it growing pretty steadily. Bitcoin up 7%, higher Bitcoin point. But the company doesn't make much money. So you can see this Bitcoin Rev, Bitcoin COGS. They go up and down together. So up 7 in sales, up 7 in COGS. So it's kind of not too important. That's why you don't want to look at the total revenue line as being too important. You kind of want to look at these two together instead. So that's that. And to my point of that they don't make much money being a middleman of Bitcoin, they make very little. So that because they report and give me all the revenue and COGS for each of the 3-4 segments, I can just put it here. You can see they only make about 2.8% or 2% on Bitcoin. So basically that's them buying and then giving it to their users, making money in between, just like a normal bank would on the spread. So not a huge source of business for them, actually. In terms of the scale and expenses, so the main thing, and this is important, is that we're getting a price, like if you look at the stock chart, back to 2018 levels, but the business has gone from 2.7 billion or 4.4 billion to 8.9 billion in gross margin dollars. So that's impressive. We're finally getting a decent price, partially because the growth has been slower and they did a bad guide. And we're going to go through that commentary as well. But you can see, especially sales and marketing and general min on the last 3 years, you can see, well, the business is growing materially, like $6 billion to $8.9 billion in 2 years. The sales and marketing has gone down, right? And they've flagged less marketing campaigns, more expense discipline. And general admin's barely gone down 3% in 2024. And they said 170 million due to less headcount, as well as a reduction in facilities of $60 million. So you can see this cost management in 24, and it really showed up in the numbers. And at the same time, the stock got cut in half, which is exciting. So that's why it's the video. Have some amortization of customers in here. They have a decent amount of amortization actually. And that's one of the things you're going to notice, especially here Afterpay. So 2022, that's when the balance sheet gets shot up. And that's basically them. On the channel, we view, this is necessarily always true, but intangibles, basically I view it as what people overpaid for. And usually it can be a ticking time bomb, not from a cash management point of view. They already spent the money, it's already gone. It's just from an accounting noise point of view, they have to impair it if whatever they bought is now perceived as being less valuable, and that can hit the line. But I just view it as not great. And you can see the amortization has pretty strong, going from almost 14 billion in intangibles to 12.8. So it's non-cash, but it is on the income statement now. And you can see it being permanently higher Afterpay for amortization. So that's important. What is also important, obviously operating income finally profitable, which wasn't the case in the prior years. And then you have remeasurement of Bitcoin here. You have Bitcoin impairment loss here. So they have Bitcoin that they sell to the customers, make spread, but they also, for operations, but they also have investments in Bitcoin. And that gets marked to market. So that adds to the volatility from a GAAP earnings perspective. So from a operational point of view, they don't control the price of Bitcoin, but they are exposed to it. And that's by design. So that does add to volatility. So during a momentum period, when Bitcoin starts going up, you should see Square start going up, because technically their investments in it are going up. So it's in a weird way, it's a way to play Bitcoin, but it's not a main part of the business. Even on the balance sheet, it's not that big. And we'll jump into that note as well. But you can see in terms of the balance sheet, still has a lot of cash. They do have some debt, but it's not, the cash investments outweigh the debt. So still relatively stable business on the balance sheet side. What else can I say? Share-based comp. One of the reasons why we saw scale in 24 is a lot of cost savings came from a slowdown in share-based comp. Part of the reason, when you're reducing headcount, but two, you your share price has gone from $230 to $50, right? When we bought it, or just under $50. So that's exciting. You can see dilution here, which isn't great in the long run. But what else can I say? You can see the margin, gross margins finally gotten better. At the same time, there's scale on the main expense items finally, which wasn't the case in 22 and 23. And that was partially the Afterpay acquisition, I think, maybe entirely. But basically, it shot up the expenses, and they had a lot of problems integrating it with Cash App, I think, more than they perceived at the time they bought it. What else is going up? Because they're lending more. This is kind of one of the things that needs to be looked at is the gross margin. You can see it going up, One of the reasons that's going up is because this cost isn't in the gross margin, the cost of lending and the loan provision. So that's kind of a little, you got to take these two together, is what I'd say. So it's kind of slightly offsetting the gross margin increase. Not obviously entirely, but it is. And then you can see EBITDA going from $1 billion to $3 billion, right? Which is nice. Even like COVID is not a great example for a benchmark, but going from 400 million or 500 million to 3 billion in adjusted EBITDA is nice, right? Your adjusted EPS has gone from 84 cents to $3, right? And it was stuck around $1 for a while. All right. And these are cost cutting things that should be stable, especially when you're growing 5 and 21%. You can cut your expenses by 2 and 3%. That's nice. Though we are seeing growth slow, so maybe they cut a little bit too much sales and stuff like that, or maybe they cut back too much on marketing. So we might see this increase again. But if the growth increases, the multiple will probably increase. So it's kind of an interesting dynamic, especially for a company that's probably more momentum oriented at a time when it doesn't have momentum. What else is going on? Obviously, the PE is finally not dumb. So 270, 130p, 62p, 42p, and now around 14 on 2024 numbers. So not dumb cheap in terms of POS providers, but again, you have Cash App in there that is growing 21% year over year, which standard POS providers don't grow. They usually grow around this 5%, 6%, right? Like inflation plus 3 or something. It's probably a decent line. What should we talk about? So this is the main, so aside from the decent last year, they had a really bad Q1 in terms of growth rate. Like the performance itself wasn't horrible, it was just they basically guided down on growth for the year. And this was exciting to me is he literally wrote in his earnings report for Q1 that this is the bottom and will drive acceleration going forward. And this was right before the Trump-China deal. It was still when the markets were starting to go up, but it was before the deal anyway. What I liked on the latest, so this wasn't on the call, this was on an earnings conference this week. So that's why I wanted to make sure I did the video this week. One, because it's a new position. I think it's interesting. That's finally not cost prohibitive, not dumb expensive. What I liked about this is that they literally said, we saw improvement from the run rates that we saw exiting Q1, which is good, right? So in April, on a normalized basis, we grew 13% year over year, compared to 7% in the month of March. So they saw meaningful acceleration in growth in April relative to March. And I was like, well, that's interesting, because they would have known that when they did the Q1 earnings call. But they didn't really color that way. And instead, they actually guided to a softer consumer spend, and they changed their guidance after a weak March. And there's just this line, it's our guidance, which includes a softening the consumer spend environment, which we have not seen through April or even the early part of May, continues to be strong, is a conservative guidance, and it's a guidance practice that deviates with their prior practices. So companies can do this from time to time. They might change how they want to guide. So they decided to shift from being guiding like what we think the business will do as close as they can to the pin. That's generally what a lot of companies do. But every now and then you'll get a company that decides, I got to be more careful. I'm going to be more in my guidance just to be safe. And that's basically what she said, right? Despite April and May so far being better. So that's exciting. So basically it tells me they underguided for the year. I mean, we don't know how the year's going to go, but that's what it tells me as of information as of today. Today is May 17th, 2025. Now we have the recent launch of the new reader, which is going to be nice in a competitive market. Square has traditionally been really good in terms of the software and hardware pairing. Probably one of the best in the industry. Like the product sold itself when it was first made, and the other companies paid catch up, I think. Right? Because I see Square everywhere I go, and that wasn't the case in 2018 when the stock was the same price and the business was far less than what it is today. So there's also Goose in here. We're not going to go too much into the AI. We haven't gone too much into it, but I did like this, just a statement, because it helps me visualize. They're building an in-app portal that every single one of our employees will log into, and every single bit of work that they have to deal with, we'll be able to show them with an interface how to do it better, how to make a task, like how AI can do this for you in real time while watching them do their work. And I think that's special, and I think that's going to help with the cost control as we still see the revenue growth from Cash App and the standard slower growth in Square. So I think that's underappreciated. I also liked how he views things. So, and I never listened to Square before, right? I've always looked at the company, but like, not yet, not yet, not yet. And now I'm okay. So this is interesting. So he basically very cavalier says, 2-year walk through the desert of despair. Like that's his word choice with Cash App and Afterpay, right? And you can kind of see that in the financials, right? It's like, oh, we bought Afterpay, probably overpaid for it. and now they have issues integrating it, and you can see the cost just balloon out, right? That was the 2 years, 22 and 23, but 24 looked pretty good. So I think they finally got a handle on integrating that buy now, pay later into Cash App, and that's what that would imply based on his past tense verbiage. So I like that part as well. And then you have, not only do you have a new reader, you also have Proto, which is like their little Bitcoin mining thing coming out at the back half of this year too. So you have a new product coming out that will also accelerate sales. And this is after they've already incurred the R&D to make it. So that's also coming down the pipe. And then finally, the most important thing, so the analyst basically said, like, your share points or your share price is really bad. And what are you going to do about it? And he's basically said, there's nothing I can tell you. I just need to ship. So take action. And I like that because it's honest. Just get the numbers on the board and things will show up. So I just thought that was good. What else can we say? Bitcoin, here's the investments as measured as of December 31st. You can see they used to have 100 million in Bitcoin, then they had 340 million in Bitcoin. Now they have about 800 million in Bitcoin. But in terms of the overall valuation of Square, it's not that big. Like it's decent size, but it's not be all and end all. Like when I look at any news articles, it constantly focuses on Square's exposure to Bitcoin, but it's just like it's not that big. Like it's exposure to Cash App and Square a lot bigger. Like the core businesses, this is just a rider, and this will ride with inflation. So this will be interesting because if Bitcoin starts accelerating in price, you might actually see the multiple expand for Square at the same time, because usually multiples expand when risk is on, which would be implied by when Bitcoin is rising. So that's an interesting in itself, and it usually also increases transaction volume when things are good. So I think this adds to the momentum play that's naturally ingrained in Cash App's model and Square's model. What else happened in 24? So this is another thing that I look for, and this happens with tech companies. We saw it with Pinterest actually lately in Q4 as well. Is basically once they now view themselves as profitable, they can do this deferred tax asset. So basically they just realize a whole bunch of it. So you see that, I didn't really talk about it, but you see that here in the 1.5 billion back from provision for income tax. A lot of these gap earnings here is from getting a bunch of money back. Because the company had a history of losses. So now they can finally start releasing the valuation allowance for deferred tax assets because they're going to start making money. That's what they're saying. And that's what this implies, this accounting change. Basically, they say we plan to be profitable for the rest of our history from now on, which is exciting to me because it's basically accounts are usually slower. So it's kind of like we now believe that we're now permanently profitable. And I think that's underappreciated by, like, don't get me wrong, I don't really care about the accounting noise of it. And it does help for cash, but it's not. I just feel that switch being like, this literally tells you this business is now for real, and I just like that. I would be interesting to see, like, maybe doing like an AI thing with when a company now does this and they realize their deferred tax assets because they're now proving themselves to be profitable in the future, how the stock performs over the next 5 years. That would be kind of interesting to see. Because I have a feeling that it's probably indicative. I mean, it depends where the share is when it starts doing that trend, but I bet you it is indicative of positive performance, or at least there's some correlation there. Share-based comp, just want to show that it didn't grow in 24. That was one of the reasons for scale. The business still grew 21% on Cash App, 5% on Square, but you can see the G&A is down, sales and marketing barely up, product development barely up. The share-based comp is finally in control. And then in terms of the new handheld that they just released, you can see that it's pretty thin, pretty low weight relative to the competitors. Like Toast is probably the hardest one right now. Clover actually reported a slowdown. At the same time, Cash App's is saying they're accelerating, which is interesting, right? Fiserv just reported, which owns Clover. And you can kind of see that it's cheaper as well, and it looks good, right? You fit in your pocket. So I just think this is nice too. So they have product launches at the same time the business got sold off 20% on the call. At the same time, they're saying things are better than what we just guided to. One of the reasons why the share price went down like it did. So I just feel like this is a decent time. And this is just some color on like how they view what they need to do. So they're going to try to be more aggressive, I think, in their sales team and going door to door than they have in the past. Though, I mean, when you have a superior product, it's going to sell itself. You just need to get the word out. You're like, hey, our thing is better. Like, just show them this, right? It literally shows we're better. And they're going to do releases now, I think, every 6 months or something, which is also nice. Or maybe it's every quarter, but they're going to do releases and product updates for software. to make this product better as people buy it and use it. So anyway, I'd like to know your thoughts on Square. It's probably one of the more interesting times to look at it, hence the video, hence why we started owning it during this panic on the earnings call. Just when you see color, you have the CEO calling a bottom in his own stock. He owns 8% of it. It's kind of his baby after Twitter, right? So I just view this like the business is far superior to what it was here. Far superior to what it was here, even though the stock was at $250, right? And now it's at 50 or 57. But yeah, longer term looks pretty good to me. Though you never know with POS providers, right? You can have credit provision risk. You could have the buy now, pay later. Maybe they're not underwritten the same. You have a lot of stress all at once. There's things that can happen, but the in terms of the fundamentals based on current information and the current share price and the current guidance and the recent commentary, it makes a lot of sense with the products that are coming out to be excited about Square for the first time in probably 5 years. So anyway, have a great rest of your weekend.